morning. It's Signal Centre Talking Bull. It's 8 o'clock on Friday. I've got the date right today. I just realised I was chatting to Taff just before the show, realising that I've been publishing the wrong headline. I lost a day because we were thrown out of kilter after getting banned on Tuesday. But we're back and we're looking to go through the news headlines, go through what's happened in the market, some interesting moves, especially in the dollar backed securities and or dollar denominated assets, I should say, rather. And going to take a look at those, and we're also going to go and do our Gunter Head and calendar for upcoming events. So let's just dive straight in there and talk about the headlines as they are. So let me just get my little spreadsheet up, which I've shut down. So we're looking at US retail sales increased 0.3% for August after a revised 0.4% decline the previous month and slightly above consensus forecasts of 0.2% gain, while underlying sales declined 0.3% on the month and below expectations of a 0.1% gain. New York Empire Manufacturing Index improved sharply to negative 1.5 for September from negative 31.1 previously, and well above consensus forecasts of negative 13, although they still reflected net contraction for the month. There was also a sharp turnaround in the new orders and components figure, but unfilled orders declined slightly. There was a net increase in employment for the month, while there was a significant easing of cost pressure on the month, with prices received also increasing at a slower rate. Companies were slightly more optimistic over the outlook, with inflation pressures expected to ease only slightly. The Philadelphia Fed Manufacturing Index dipped sharply to negative 9.9 for September from 6.2 in August and below consensus forecasts of 3. There was significant contraction in new and unfilled orders, but shipments remained in positive territory. Employment increased at a slower rate on the month, while inflation data was mixed, with an easing in cost pressures as the prices paid index retreated to the lowest level since December 2020, but with a faster rate of increase in prices received. Companies were slightly less pessimistic over the outlook, with inflation pressures expected to remain strong. The Swiss franc maintained a strong tone on Thursday, with further demand and for the currency on its longer term qualities and national bank determination to control inflation. The euro declined to fresh 7-year lows around 95.35 during the day before managing to recover to above 0.96. And Chinese data releases were slightly stronger than expected, with an annual increase of 4.2% for industrial production from 3.8 previously, and 5.4% growth in retail sales from 2.7 previously, and above expectations of 3.2. Japanese Finance Minister Suzuki stated that no options would be ruled out in taking action if the sharp yen weakening persisted. UK retail sales volume declined 1.6% for August after a 0.4% increase the previous month and weaker than consensus forecast of a 0.5% decline. There was a 5.4% annual decline in sales, reinforcing fears over the spending outlook. So that's run through the news headlines. Let's dive straight into the charts, and we're going to take a look at crypto to start with. So Bitcoin, this was my Gunter Head trade yesterday, and really the levels to watch. We're going into the weekend. Remember, Bitcoin does trade over the weekend. How can you forget? We can definitely forget about it because we don't work over the weekend. But we've broken down this this price action that we saw on the Tuesday, the big turnaround that we saw, bearish outside candle. We've had Wednesday and Thursday have continued this move lower, as you can see, lower lows over these 3 days. And we're looking at price action today. Hasn't really got started yet, nothing really going on, trading at around about 19,800, support coming in at 19,005. Then we should get further support, slightly better support at around about 18.6, and the swing low that we saw at around 17,600, that could be under pressure over the weekend if this move continues. So they're the levels to watch. On the upside, really needs to capture ground above the 20,500 level before we can sort of like relax just ever so slightly. But as you know, my view on crypto is we are going a lot lower over time. So yeah, certainly is. Taff, you want to share your screen on the commodities and we can sort of like dive into that? I know there's been quite a decent move in the gold yesterday.
Yeah, gold went down. Okay, I'll start with gold. All right, let's just go to the daily and see the breakdown that is currently going on right now. So you can see this is from yesterday. This level here was a demand zone, and it was tested and respected a few times before, and we tested it again here. We thought we were going to test it here, but then price just went straight through. So you don't want to be catching any falling knives on this. I think any trade you want to make here will be preferably just to be selling at the market, or if you're like me, you want to be prudent and sell rallies. Let's go to the intraday. Let's go to the intraday. Remember the other day I talked about this potential, this being a bearish flag, and I put this measured move target. So I think ultimately probably we're gonna go down to around that 1610, 1611 zone. But for today, on an intraday basis, I am looking to sell retracements. So if price comes up to the 1683 level right here, and we reject that zone, then I'll be biased to take a sell. If it comes up further to the 1690 level or zone, remember these levels are really more of zones. Price is not going to respect just a simple number. So if it comes up to that 1690 zone again, I'm looking to sell it again. What I found interesting on this chart is if we go to the daily, all right. If we go to the daily, I found this to be very interesting. If we look at this level here, this 1807, 1800 level here, price came, tested it, went up, tested it again, and then we broke it here, and then we came up and tested. So it was previous support, and then it became resistance. So if we use that as a pivot, and then just try and use our fib extension from here, right? We come down to where the bearish flag started, and then we come up to the boundary here. I like how the bearish flag measured move target is just coinciding with this fib extension at the 1609. Well, mine was 1611, but that zone 1609, 1611 zone. So I think this is really a place to be targeting if you're short in the near term. So I think I'll just look out for this zone here because it's really making a good confluence with the fib extension. Okay, so that's on gold. Let's go to crude oil. Crude oil had another bearish, very big bearish candle yesterday. I spoke about this baseline resistance from the Ichimoku. I just removed the lines. I spoke about the baseline resistance here. That price is not price came up and just couldn't break this resistance. On the 14th, price came up, and then we thought we had a bit of momentum. But if you look on the intraday, really it couldn't break this resistance. Let me go to the intraday and just so that you can see what I'm talking about. This is the intraday. This is the intraday. This is the 89.43, 89.50 level that I talked about there. That price just couldn't break it. I also talked about the inverse head and bullish head and shoulders formation not really going to completion. I was saying I don't think it's going to go to completion because of the confluence and the bearish trend that we're in. So what am I looking at today on an intraday basis? We seem to be bouncing a bit here, but I think this is just price coming to get a few orders in this zone here. So my bias is to sell into this bullish momentum that we have. we come into this region here, if we have rejection candles, I'm going to sell this, potentially target the 84 zone here, and then as my first TP, and then I'll go to the 8130, which was the previous swing low that we had, as my second TP. So for both commodities, I'm looking to sell. For oil, I'm looking to sell into resistance right around the 87 zone, as I pointed out there. And for gold, it's pretty much the same again. Any rallies that we get, I'm looking to sell into them. Thank you, Steve. Over to you.
Excellent, thanks, Barry. I'm going to dive straight into the dollar index. On a daily basis, this continues the move higher. We're forming a little bit of a flag pattern from the reversal on the 13th, and further upside, really nothing seeming to slow this down. We had a pullback level on that 13th, little bit level of support around about the 107.60 level, still just in front of there, and catapulted higher. We haven't really moved a huge amount over the last 3 days, but yeah, the momentum is to the upside, and we'll be surprised if that carries on. Euro dollar has sold off, as we can see, on the 13th, and it's stalled again, pull back a little bit, but this on a shorter term chart, let's look at the shorter term charts, looks 4-hour chart looks again like a bit of a bearish flag. We sort of got and we've got a similar line here. So bearish flag, measured move target for that we can take, and we can just do this, and the measured move target will be somewhere around about the 97.80 level. So price to watch here, we've got the support coming in at 99.56. We've got resistance, a band of resistance all the way up to the parity level, from there up to 1.0020. And yeah, similar sort of price action we're seeing, although cable a little bit more under pressure, really testing this 114 level this morning. So that's under pressure. Probably a bit of follow through from the sort of figures we've got over the last 24 hours in cable. Levels to watch on a longer term basis, we can see how this is important. This level, this was the 16th of March swing low. So this is the start of the pandemic, when the markets, all the big asset markets, sold off really aggressively, got down to 114. So this is a major test, and if you look at the candle on a weekly basis, that's engulfing completely a bearish outside candle forming on cable. So for me, cable's really under pressure, and I can't really see how. And if you think about it, this is a very, very similar price action to gold. We've got the double top formation, and measured move target for that would be a move to 84 or 85 cents. So that's telling us we're going through parity. There is a major level at 105.45, which was the swing low back in 1985. A good year for TAF.
Yeah, that's my and also on cable. I mean, with the bailout that's being proposed, I think it only gets worse, man. I mean, who's gonna pay for that? I think it's just gonna get worse for cable. You know,
we should just kick the can down the road, get your kids to pay for it. I think, TAF. That's what the idea is, isn't it? The next generation.
My grandkids.
Yeah. This younger generation seems so awake that you know, maybe they'll be able to work out what to do with this big ball of debt we've got. Anyway, let's move on to indices, and we can see we're having a torrid week in over across the pond. On the Dow, we've broken down through this 30,860 level, which was the swing low earlier or yesterday. And major levels to watch, really, where we're sort of in this, we can see we've had a lot of spike lows around here. So we are going to sort of venture into support 30,500, then after that 29,650. So doesn't look great. We really need to get above 31,300 very, very quickly indeed. doesn't feel like it's got that sort of momentum in it today. Nasdaq, similar, it's broken down through the bearish channel, retested the bottom of the channel and continued lower. So that looks set to continue this move. 11,000, that's the area of support that we saw in mid-June. So wouldn't be surprised to see at least this extension carrying on. We've got a little bit of an ABC correction. So even we get that, funny enough, the measured move of that would be a move to 11,000. So going south on the indices, S&Ps has broken down through the 3,885 level, just trading now 3,873. Is there anything that can save these indices? I'm not sure. DAX is under pressure as well. We've had 3 negative days of price action, and the next support level coming in just around about the 12,600, 12,400 after that will provide some sort of support, but this all looks pretty torrid and pretty horrendous. Levels to watch after that, 11,300 really needs to sort of like recapture the 13,100 level to stave off the bearish momentum. We've had a little bit of a rally this morning, well, a sharp dip lower first and then a rally. We got potential for a little bit of light relief in the FTSE. Not sure. Obviously, this benefits from the dollar strength. So this isn't under quite as much pressure because we've got this dollar safe haven type dollar rally we've got going on. If we look at, take a nice little trend line, which this one here collects 1, 2, 3, 4, 5, 6, 7 points, we should get some sort of support coming in around about the 7,200 level. But again, probably the way analysts would look at this is looking for opportunities to sell rallies, although the FTSE probably doesn't repay as much dividends as the rest of the indices at the moment if you're using that approach. So that's where we are on that. Let's move on to the gun to head challenge. This is where today myself and Taf will look at a market and try and pick a winning trade. We've got to enter at market. When we analyze the chart, we've got to have a stop and a target, which is at least a 2-to-1 risk reward ratio. And if it doesn't hit the stop or target during the day, we close it at 9 p.m. And we'll be able to funnel these performance through and show you the results of them next week when Joe's back. So yeah, I'm a little bit unsure really what I'm looking at.
I'm also scanning.
Yeah, I mean, I'm sort of bearish towards.
This is actually harder than I thought, man.
Yeah,
like just taking a trade.
It
like
is
in the market.
It is. It's not the ideal way to trade, and that's why we call it a challenge. It's a little bit of a game using sort of technical analysis on a really short-term basis, but really under pressure. It's the sort of thing we do on a daily basis, I know, because we come up with trade ideas on over 40 assets on an intraday basis every day. So this is part of what we do, and this gives us a chance to show you how we look at markets and how we interpret the markets. For me, the gold is slowed down a little bit. I was going to sort of like try and go for that again, yes.
It doesn't have that momentum anymore, does it?
No, and the only one really that is sort of jumping up at me is potentially this oil trade idea, which again could be a bit of a bearish flag on a short-term basis. And
do you want to share your screen, Steve?
Yeah. Let me have a look at just this one here. This is the only thing, and it's only going really on the hourly chart. I might just throw a little Ichimoku in there just to give me an idea if there's any other levels. Yeah, there's nothing really additional I can add to that. It's just this previous support level, the 85.72 is pretty key. We've just rallied up today, so we've had a bit of a positive move, but have we stalled now? I'm going to go for this and selling into oil. Trading at 85.18, selling oil at 85.18. I'll put the stop at 85.78, and I'll go for a I go for a 120 target, so $1.20 target, $60 cent, $1.20 target, 60-cent risk. Risk reward ratio of 2 to 1. So I'm going to go with that. See if we can get anything out of that today.
Nice.
Has that given you enough time, Taff?
Yeah. It's giving me time to kind of look at something that's looking interesting. All right. So I'm going to the New Zealand yen. I'm gonna play this cluster of support that we have here, although it doesn't. This 4 hour candle had a bullish engulfing. So I think I'm just gonna play this, and then let's see what it looks like on the hourly. Oh, it doesn't look too good on the hourly.
It's tricky, doesn't it?
Yeah, it doesn't look too good on the hourly, man. No, not at all. Not at all. Not at all. All right. Let me see what's happening with Bitcoin. No. Okay. Bitcoin is very bearish. But to get in a trade now would not give you a good risk to reward. In fact, you know what? Let me just do the New Zealand yen and look for a bounce from that cluster of from this here.
Yeah.
Let me play
this.
Okay. Let me play this. So I'll play the market. I'm long here. I'll put my stop right beneath here, and I'll target I'll say 86, 87. Okay, that's a bit greedy. Okay, I'll target 87.73, somewhere there. Yeah. All right. Let's just 87.80 will be good. Yep. Okay.
Yeah, you got that.
Yeah. So I'll play this. It's currently going down, but I'm looking at this cluster of support here. Looking for a bounce up here, and then it goes down. So I'll play this. So this is New Zealand yen. I'm buying at market, which is 85.56. My stop is just below at 85.14, and I'm targeting 86.80. Right. Let's see how that plays out. All right, man.
Excellent. Thanks for that, Taff. And finally, we'll go through the what we're expecting today, day ahead. University of Michigan Consumer Confidence Index. Normally, well, especially in current circumstances, that will be a pretty volatile figure. Next week, just as a reminder, the central banks will be announcing their monetary policy decisions. All eyes on that from the 21st. That will be the Fed Reserve and the Japanese, Swiss, and English monetary policy decisions coming out on the 22nd. So that's a wrap for today and a wrap for the week. We've got Joe and Jamie back next week. We've got a full house next week, so it should be quite good fun. And look forward. Have a good weekend. Be careful if you're involved in Bitcoin. You have to carry on over the weekend, and we'll see you all on Monday.
Cheers.
Take care.
Bye.